I declared a national energy emergency, and it's so important, national energy emergency to unlock the liquid gold under our feet and pave the way for rapid approvals of new energy infrastructure. The United States has the largest amount of oil and gas of any country on earth, and we're going to use it. Not only will this reduce the cost of virtually all goods and services, it'll make the United States a manufacturing superpower and the world capital of artificial intelligence and crypto. My administration has also begun the largest deregulation campaign in history, far exceeding even the record-setting efforts of my last term.
Coming up today, S&P 500 closes at an all-time high. Larry Fink worried about inflation. Trump's latest demands from Davos. Are we entering the fart coin stage of the cycle? And a look at Tom Lee's ETF granny shots. You don't want to miss this one, guys. Let's go. And welcome back, everybody, to the only daily market show where your host actually trades with transparency and who doesn't promote bucket shops, day trading, or penny stocks to you. Things that are proven to cause over 90% of retail traders to lose money. Here at Click Capital, we're focused on making money through proven strategies that I actually trade myself. And stick with me today because I'm going to share with you two exciting stocks I recently bought in the early cancer detection and aerospace industry, two areas of the market gaining a lot of attention. And I believe these stocks are just starting to run now. My stock picks account is up over 40% in time-weighted return since starting in June last year. So I think you'll find that interesting. And I'll also share with you a list of the best performing themes in the market right from my Tiger Brokers account shortly. And so we're at brand new all-time highs in S&P 500, 6118 on the third market day of Trump's new term in office. Market seeming to like what it's heard so far. And so this is a pretty big deal. That's why I played the clip of Trump at the start of this video just to summarize before we get into the markets and charts. Trump came out swinging at the Davos World Economic Forum earlier today, and in a nutshell, he called on foreign countries to make their products in the US or face tariffs. Said that he would ask the oil producers such as OPEC and the Saudis to reduce oil prices and thereby inflation, and called for lower interest rates. He expressed his desire for renewing their expiring 2017 personal tax cuts and also for cutting the corporate tax rate. But that cut would only benefit companies that produce within the US. He also saw the corporate tax rate cut as benefiting jobs and helping to reduce inflation. He also hit out the EU's tax and regulatory burden, saying the EU treats America very, very unfairly and very badly, and noting the EU has been targeting US tech companies. He also sees low energy costs as an important way of lowering costs and important for the development of AI, which is hugely energy intensive. So he intends to fast track approval for electricity generation projects. And apart from pulling the world in line, changes to energy, demanding lower cost of oil and interest rates to stimulate economic growth, what most stood out to me is his ambition to make the US the AI and crypto leaders of the world. This is a huge tailwind that spreads to many industries. And we can already see that playing out in the market just over the last week alone. Just looking at my Tiger Brokers account here, ranking themes of stocks in the market at the moment by their 5-day chain. Lidar Concept, Nuclear had another monster day today, like I'm about to show you in the chart soon. Gene editing, AI, healthcare, early cancer detection has also been catching a bid, and like I said a bit later on this video, I'll show you what early cancer detection stock I recently invested in. Surprisingly, renewable clean energy caught a bid today as well. Electronic related stocks, and you know the market's feeling good when the Wall Street Bets theme has been trading really well. And other stocks to do with new industries, like you can see in this list here, have been performing pretty well this last week. So there's a lot of enthusiasm in the market for these early stage, high growth type industries. And this is all classic signs of a bull market. When you see this high growth stuff trade really well, investors paying more attention to growth and potential rather than valuation. And I've actually got a themes watch list here in TradingView. I put the link below this video. For those of you who are interested, you can easily copy it straight into your own TradingView account. Apart from rich tech, robotics pulled back a little bit today, but like I said, what did really well was nuclear. Look at this, Oklo ripping up over 13% today, and smart money has been coming into stocks like that. I can see this inside my Tip Ranks account. Hedge funds increased their holdings by 1.8 million shares last quarter on Oklo. The hedge fund confidence signal is very positive, and you can see that on the chart with this huge volume all the way back to October. Big momentum thrusts on heavy volume, and with others again today. Nuclear energy breaking out to a brand new all-time high. Same with NewScale. Solid momentum thrust there today. And the most volatile of them all, Lightbridge, up over 41% today. And like I said, clean energy also caught a bid there today. Bloom Energy looking good. And even some of these solar stocks that have been beaten down a lot lately, seeming to bounce off their lows there. There's a look at Enphase on a big bullish divergence on my DSI here. There's a look at the Destiny Tech 100 fund, which actually owns shares in the still privately held SpaceX, trading at a huge premium to NAV. A little bit mixed in the AI theme there today, but what did well again? Tempest AI. Just after we got news a few days ago, Nancy Pelosi, the Queen of Wall Street, invested into it. Like I've been saying of late, AI healthcare is an emerging theme that could really play out this year. Quantum computing was a little mixed today. Cybersecurity came off. We've also got EV batteries and a few crypto-related securities in there. There's a look at the Trump coin, $35 a coin. So like I said, if you want to copy this list, click the link below this video, and it'll automatically populate in your trading view. And I will be adding to this list with more themes over the coming days and weeks. And so this will be a good way for us all to keep a track of the big themes in the market at the moment. And if I've missed any, you're welcome to post some tickers in the comments below this video as well. But just getting back to some of my favorites, like I told you guys yesterday, Moderna having another good day today, up 10%. As surprisingly, this new admin has started talking about personalized vaccines, cancer vaccine, AI vaccines. Not sure how many people had that on their bingo card for the first few days of this new presidency. But like I said, this area of the market has been catching a bid. Just like that stock I mentioned to you guys yesterday, Grail, involved in early cancer detection, just broke out to a brand new all-time high. This is relatively new on the market, just IPOing in June last year. And like I just mentioned earlier, the early cancer detection stock I just recently invested in, Personalis, ticker PSNL, as part of my stock picks portfolio. Small cap stock, 436 market cap, does have revenues almost $90 million in the last 12 months and growing. And there's a look at their website, early detection, advanced insights. They're at the forefront of detecting the smallest traces of cancer reoccurrence. Can detect as little as one fragment of cancer DNA among 1 million healthy DNA fragments. And so they've got their own innovative platform, and they're already starting to partner with some big companies like Moderna, which I'm also invested in. And again, I think this is another important theme developing this year as AI spreads from chatbots into other areas of the market, healthcare being one of them and robotics being another, which I'll get into in a minute, but I just wanted to share the other stock I recently invested in as part of my stock picks portfolio, Innovative Solutions and Support, ticker symbol ISSC. And just as a quick reminder, this video and all my content is not financial advice. I'm just sharing with you guys my positions, thoughts and research, as that's what you guys have told me you find the most useful. And so this is another industry that's been gaining a lot of attention lately. Aerospace, aviation. And so this is another small cap stock, 197 million market cap, that's been breaking out really good lately ever since it had its good earnings. Beating expectations, we got a lot of volume coming into this stock. After it had been going nowhere for a while, seems to have just woken up. Really good increasing revenues, positive cash flow. And there's a look at their website, state-of-the-art aerospace products, serving a wide range of industries, commercial air transport, military products, and business aviation. And like I said, that's a bit of a cousin industry to space exploration, which has been doing really well the last couple of months, along with quantum computing and others. Another one I'm invested in, Intuitive Machines, of which me and my members are up over 150% ever since I first invested in it last year, and I'm still holding long. It's only a $22 stock in a really strong uptrend, so I'll be riding this as long as I can. And if you're interested in seeing all 24 stocks I'm currently invested in for my stock picks portfolio, which like I said is up over 40% in time weighted return since I started it in June last year, then click the link below this video. I've still got available spots for anybody who wants to join, and things are shaping up for another great year. But like I said yesterday, one area of the market I'm really excited for this year is robotics. Another extension of the AI boom into the physical world, with the robots ETF making a clean break to start this week off after a year-long consolidation. And what really got me excited is Jensen Huang talking about it recently in an interview he did with a tech blogger, which wasn't with the mainstream media, so not many people may have seen it. I'll just quickly play this clip for you so you can see what he actually just said a bit over a week ago.
The world needs robots. The technology of building general humanoid robots, which is going to be the most useful, of course, because we build the world around ourselves. That technology is incredibly hard to do. But for the very first time, with transformers and these large language models and the breakthroughs that we're seeing with foundation models, we finally have the technology necessary, we think, to be able to make a real contribution in this area.
Jensen, you led NVIDIA through gaming and so many AI breakthroughs. Which emerging technology do you see or think will be the most impactful for us over the next decade?
When you take a step back and ask yourself, what would happen if we could scale intelligence, building robotics, the things that we're working on?
So what's arguably one of the smartest businessmen of our lifetimes, NVIDIA is now the largest company in the world, with a $3.6 trillion market cap, now larger than Apple's and Microsoft's. So it's worth paying attention to the guy behind the largest company in the world is saying, and where he thinks it's going, likely positioning his business for the same thing. That's robots. He's a big believer in Elon Musk, closely partnered with all the mega cap tech so he can provide them with the picks and shovels hardware behind the AI boom, and potentially the physical side of things could be bigger than the software side of things, chatbots, chatbots and LLMs. Like Jensen Huang says, when AI doesn't just understand language, but also understands the world, that's really going to create leaps and bounds in robotic technology. Of course, that is chips can power. But that's why I'm really excited and invested in other stocks like Rich Tech Robotics that offer robots for the hospitality and medical industries as well. This is still a small cap company, 386 million, and they do have revenue. And you'll notice in the last year, the revenue came down, not because they lost sales, but because they switched from selling their robots to a lease model. So they're leasing them out now, which I think will work better in the long term. But again, this is really highly speculative stock. It's obviously going to have a lot of volatility. So please don't go putting your whole account on this or anything like that at all. This is just one of dozens stocks that I'm invested in that I thought I'd share with you guys. But just getting back to the market for a second, here's a look at the sector performance year to date. We've actually got industrials out the front now and making a bit of a comeback, materials and energy. And we've still got financials up there. Every sector positive except consumer staples. Also down the bottom, REITs and utilities. So that's a bit of a growth risk on rotation there. Market feeling pretty good here at all-time highs. And that's the first all-time high for 2025. We did 57 last year. And what you'll notice going back in time is there's clear clustering that can last for some time, like it did from the early 80s all the way to the late 90s. And just looking at some data on the Dow Jones Industrial, going back to 1900. In the presidential cycle, just looking at the first presidential year, which we're in now, we can consolidate, go sideways for a few months before trading up and then pulling back in that usually weak Q3 period. Second presidential year can consolidate, and it's typically the second half of the presidential cycle that stocks do better. And just looking at some other data here of seasonality. How often have sectors beat the index during the first year of presidential cycles? In the green, number of times they've outperformed. In the red, number of times they've underperformed. Financials, healthcare, consumer discretionary, energy, industrials sticking out as some of the best sectors in the first year of a presidential cycle. Healthcare is the weakest sector at the moment. The only one underneath the 200-day moving average, but we've got energy and industrials out the front so far this year. And what's still strong even from last year is financials and consumer discretionary. And here's another visualization of this bull market here in the blue. Going back to the early 60s, average bull market lasts 63 months, average bear market 14 months. Average bull market return 182%. So far, this bull market's up 70%, 27 months old. So still relatively a young bull market, not quite half the age of the average bull market since the early 60s. And a lot of indicators at this time of year can give us an idea for the rest of the year. A higher first 5 days, and 2025 is a good sign. S&P 500 annual performance based on what the first 5 days do, going back to 1950. If the first 5 days are higher, we get better results than our average year. The market up 81% of the time for a 14.2% average gain. And if the first 5 days are up more than 1%, which we didn't quite do this year, then the returns are even better. And again, this logic extends for the January barometer. If January finishes up, that's a pretty good sign for the market. 12-month return is positive 80% of the time by an average of 13.2%. And of course, this doesn't guarantee we're going to get this year. We don't want to get too hung up on seasonality. It's just one part of analysis we conduct. I think what's more important than seasonality are the fundamental drivers of this market, with the new admin being a big one. And of course, what stocks correlate most to over time, earnings per share, EPS. Still early in Q4 earnings season. So far, so good. Companies coming through with some pretty significant beats. Just got a few out there today. GE beating, Intuitive Surgical, TXN, Union Pacific, and we're still waiting to hear from a few others. And going into next week, we start off with AT&T, a few other blue chips on Tuesday. Wednesday will be the big one. Microsoft, Meta, Tesla. Also got the Fed meeting next Wednesday as well. Be interesting to hear what Jay Powell has to say in response to Trump demanding lower rates. Another hot stock we'll be paying attention to in a week and a half when they report, Palantir. Being one of the hottest stocks over the last year, has paused and consolidated over the last month here, but it may just have got the kiss of death from the man who hardly misses, Jim Cramer. Posting on X today, nothing can stop Palantir, nothing. And it's typically when he makes these big bold claims like this, they tend to blow up in his face, just like someone posted underneath his comment today. Google Maps screenshot of Palantir headquarters moments after Jim posted this. We've also got the CEO of the world's largest asset manager, Larry Fink from BlackRock, saying inflation could drive bond yields to 20-year highs and shock the stock market. And I agree with him, this is the biggest risk to the market this year. I think that's what stocks were already pulling back over the last couple of weeks. Before coming into inauguration, was that 10-year ripping higher ever since the Fed cut. Larry thinks it could actually jump to 5.5 this year, and that's going to put some pressure on stocks, which no doubt it would, unless we're getting super big GDP and EPS growth to overwhelm that, which very well could spark inflation. So I think it's more likely we see a resurgence in inflation than a recession at this stage. But of course, anything can happen in the markets. Anybody who tells you something's definitely going to happen is either lying or Nancy Pelosi, both of which I certainly am not. But yields did pull back a little bit today. Trump's really going for it here. Wants low oil, wants low interest rates, demanding big investment from the rest of the world. He's really using all of the United States leverage to extract maximum price from the rest of the world. And like I'd been saying, I think his second term is going to be more successful than his first term. He's got the experience from the first term, plus he does have a lot of experience in negotiating. He's spent his whole life in battles, personally involved in over 3,000 lawsuits. Mainstream media have been coming after him ever since he entered office, for which it looks like he seems to be winning that war. With more political support, this time around with a more convincing win back in November. However, the Federal Reserve is still independent from the White House. Trump can't force the Fed to cut interest rates. He's already started putting a lot of pressure on Jay Powell to do so. That's why it's going to be interesting to hear from Jay Powell next Wednesday. He's likely going to push back like he has done in the last few months, saying that his decisions are not politically driven, even though he did the biggest dovish soft cut right in front of an election, then did another flip-flop afterwards back to inflation, and he says he can't be forced to resign either. Could be a bit of a standoff. He's also putting the pressure on OPEC and the Saudis, along with the Russians, once the war in Ukraine ended, threatening everybody with tariffs. And again, oil did pull back a little bit today on that. After just like yields had been a little hot coming into inauguration, it's had a pretty significant pullback from over $80 a barrel last week to under 75 here today. But we're already getting some big deals like Stargate, which is still a little light on details, yet to be seen whether they can really pull together $500 billion. Microsoft CEO came out and just said he's good for his $80 billion. Oracle chairman Larry Ellison seems all in on it, along with Massa from SoftBank. He's always been a big Trump partner, and he pretty much told the world today, make your product in America or you'll pay tariffs, putting the hard line on Canada, for which he wants to make a 51st state, also going after Greenland, potentially adding that as the 52nd state. Of course, those are quite ambitious goals. Pressure on Europe as well. And again, if he only pulls off half of all of what he's trying to do, that's really pro-American. Like I said, American exceptionalism could be accelerating on the upside. All this money coming into the States, high-end manufacturing, AI, and just after we heard the Stargate project, $500 billion, Saudis came out, tried to do them one better and said they're going to invest $600 billion in the US over the course of Trump's new term, to which Trump replied, do you mind rounding it up to $1 trillion? Which again, even if he meets in the middle, that's a big deal. That's a lot of money coming into the States. A lot of capital that's going to support the stock market. A lot of money to go around to plenty of industries and companies to build out a huge amount of AI infrastructure. That's why I'm excited for nuclear stocks, along with general AI, data center, and robotics, also spilling over into healthcare AI. But it's still really yet to be seen how it's going to go down with China, with them just coming out and saying they hope to properly manage differences with the US. Always be massive cultural differences between the two largest economies in the world. But like we've already been seeing, Trump's not afraid to use the state's immense leverage over China to extract the maximum price. He just said he may increase duties on Chinese goods by 10% as soon as Feb 1, but he's also instructed a lot of federal departments to do an investigation, with his big focus on China, Mexico, and Canada. And so China's still worried about the continued flight of capital from their markets. They can see now the effects it has on their economy and advancement in the world. Remember, this whole hybrid capitalism, communism thing is relatively new to China. They've only really been copying the West's capitalist policies for about 25 years or so, while at the political level, still trying to retain absolute control via communism. So keep in mind their economy is not in a recession. Their GDP is still growing a bit over 5% a year. To get a recession, you have to have negative GDP numbers 2 consecutive quarters. But the GDP growth has been tracking down from 8-9% 5-7 years ago. So they're looking to put a bottom in that, but more importantly, a bottom in their capital markets. Property, stocks, bonds. They want big international investors to come back. And like I've been saying all last year, I think they'll stimulate as much as needed to eventually get it done. There's just going to be a period of volatility until the market really knows what the tariffs are and what the material effect is likely to be on their economy, and just how big a stimulus the CCP go to counter all of that. But like I said, I'm still a long-term China bull, and I plan on staying invested in Alibaba and Tiger Brokers for the remainder of this year and likely longer as well. And as we've seen now, thanks to the launch of his own meme coin, Trump is serious about being a crypto president. Just signed his first executive order, as it very well looks to be on the way of an official strategic national reserve of Bitcoin, which has to be a positive for the industry. However, not everybody's on board, including billionaire hedge fund investor David Einhorn. He thinks the market's entered the fart coin stage of the cycle, and he's staying out of crypto. He's questioned the rise of meme coins with no intrinsic value. It's anyone's guess as to what will happen next, but it feels like it's going to be wild. And it's true, Bitcoin could rip to 200,000, 300,000 this year, along with the meme coins. Got to remember that bubbles go for further and last longer than what we naturally think, especially in the digital age today. This is not like tulips, where there was quite a bit of physical effort into acquiring them. Anyone can just click a few buttons on their phone to buy a bit of Trump coin. And of course, just like Bitcoin, none of these coins are actually used for their original purpose, being an anti-fiat currency. No one's using this stuff to buy their bread and milk. It's pretty much just a legal way, or should I say, a gray area way of conducting a pyramid digital scheme, which we see so many celebrities cash in on. I could literally do the same with you guys. I could create a Click Capital coin. I could own 80% of the supply. I could pump it up to you guys, say it's got this technical thing, that technical thing, it's going to be great. And we all pump it up. What would happen is a few people, including myself, would make a lot of money on it. Then when the price is really high, I could unload all of my supply, dump it. However, I don't want to rug my audience, so you'll never see me launch a Click Capital meme coin. Like I said, with all my services, I share with my paid members what stocks I'm actually about to invest in next before I invest or trade them, along with 100% transparency performance tracking inside my private members area. Another thing I occasionally get presented with is getting offers to get paid to promote penny stocks to you guys, for which I always turn down. You'll see some other YouTubers do this. You ever see them promote a really tiny penny stock, that company has likely paid them sometimes large amounts of money. I'm talking 10, 25, 50,000, sometimes even more to mention these stocks. Other thing you'll see YouTubers do, promote bucket shops, CFD brokers, FX brokers, basically the casinos of the online trading world. You're trading against the broker, not in a real exchange. Over 90% of retail traders will lose money, and those bucket shops, CFD brokers, they'll kick back a referral fee from your losses to the YouTubers promoting them. So you quite often see these YouTubers, they'll invite you to a free event, a gathering, they'll offer you free food and drinks and say, hey, let's catch up, guys. But when you get there, there'll be a representative from the bucket shop and they'll try and sign you up under the guise of real deal trading. So just be careful of anybody promoting bucket shops, day trading, penny stocks. They're not real traders, they're all hucksters, encouraging you to gamble. Make sure you're always trading on a real exchange like a big boy. And there's no problem in trading crypto. If you can make some money, that's great. However, just beware when you're buying someone's meme coin, you are their exit liquidity and they all eventually crash. Okay, just moving on and rounding out today, thought it'd be interesting to take a look at Tom Lee's ETF, the Fundstrat Granny Shots. The term granny shot refers to an unconventional basketball free throw style. For the fund, it represents Fundstrat Capital's unique research process. Invested in US large caps, it's actively managed, expense ratio 0.75%, approaching $1 billion in assets. There's Tom Lee there, you'll quite often see on CNBC. He's a perma-bull, and just going through the fund description, some of the themes he's focused on, and looking at some of his top holdings here, which I'll just go down into table form. Up the top, Tesla, 4%, Axon, Arista, Netflix, CrowdStrike, Amazon, Alphabet, Quanta, Intuitive Surgical. Quite a mix of blue chips there. I'm not sure whether it's worth 75 basis points, but I guess if you can stay ahead of the market, then it would be. And it's a relatively new ETF, just came on in November actually. It's done pretty well to already amass 780 million of AUM, also sitting at an all-time high. So it'll be interesting to watch this ETF this year and whether Tom can stay ahead of the market, which for 75 basis points, he'll have to. And there's a look at Bitcoin, still holding strong, $104,000 a coin, and a look at inflation expectations, still ticking higher as well. Keeping an eye on that one. Good to see actually semiconductors broke out multi-month high yesterday as well. That's a good sign. And Nvidia's just sitting below all-time highs, not that far off it actually, just a couple of points. But like I said, next week will be the big one when we've got earnings from some of these mega cap tech, Meta and Microsoft and Apple as well this time next week after it's been sold off pretty hard to start this year. But there's the VIX at 15. Option dealers are pretty chill, not too worried for the here and now. And like I've been showing you guys, some of these early stage stocks are still catching a bid on heavy volume. So if you haven't already, subscribe to this channel and I'll keep you all updated on the most important themes in the stock market for 2025. Thanks very much for sticking with me and I'll see you guys again tomorrow. Cheers.